Hello there today, viewers. On behalf of the Market 360 advisors here at Stewart-Peterson, I'm Bob Devenport, and this is your Dairy Week in Review for May 2nd, 2014. So let's start out by taking a look at how our CME dairy components settled at the conclusion of this week's trade. It was a pretty big down week for cheese, with blocks finishing the week at 207 even, down 14 cents. Barrels settled at 205.5, down 12.5 cents. Big week for cash butter, settling at 207.5, up 16.5 cents. June whey settled at 67 cents even, up about a half a cent. And June non-fat dry milk settled just shy of 180, up 1.725 cents on the week. It was a solid week for Class 3 futures as well, with the June contract rolling into the second month spot and settling at 21.55, posting a gain of 72 cents on the week. July finished at 20.55, up 32 cents, and that brings our 2014 average now well above the $21 level at 21.17, posting a gain of 48 cents on that average here this week. So let's start out here really by taking a look at our cash cheese trade. Now, as you can see on the chart here, from the high that we put in the middle of March for the black barrel average at around 240, we have pulled back significantly from that, and we've actually, as of this week's close, taken out this prior low support level here. Now, on the week, the black barrel average did sell off 13.25 cents. We saw quite a bit of selling pressure take place each and every day this week, but it was a fairly high volume week as well, meaning there was a lot of buyers willing to step in. Granted, those buyers didn't really step in until after blocks and barrels were offered a few cents lower each day, but once they got down to that level where the buyers felt comfortable, we did see quite a bit of volume move. Now, looking back here over the course of the past 2 weeks now, the black barrel average is down over 20 cents. So that's a pretty big decline over the course of 2 weeks. But honestly, it hasn't really had much of an impact on Class 3 prices, which have really done just the opposite. So let's get into our Class 3 chart here. Now we have a daily chart of our second month contract, which is, as of this week, the June contract. April expired this week, and May rolled into that front month spot, putting the June contract in the driver's seat in that second month spot here. Now, as you can see on this chart, we did get that nice big pullback here during the first week of April, but over the past few weeks, we really recovered from that completely, and we actually put in some new highs here this week. So we've taken back all of those losses, and the June contract posted a gain of 72 cents here this week. Now, that coupled with the 20-cent pullback that we saw in cheese is definitely some non-typical price action. Generally, cheese prices tend to set the tone for what we see in Class 3 and really tend to lead that price direction. So the fact that we're seeing this kind of divergence is a little bit out of the ordinary, and the odds are we'll probably see one or the other correct to get more in line with where the other one is, meaning we'll probably see Class 3 either come down in price to get in line with where cheese is pricing milk at, or we'll have to see cheese prices come up to get in line with where Class 3 prices have gone over the past couple of weeks here. Now, getting into some fundamental data, we did get our March cheese production numbers here this week, and it showed a solid rebound from where we were at in February. You can see that's more or less just that seasonal pickup in cheese production, though. What's more important is that year-over-year increase, and we didn't really see too big of an increase from March of 2013. From March of 2014, we were up just about 1% from a year ago. So the fact that we were up about 13% from February is generally, again, just that typical seasonal move. So from where we're at now from a seasonal standpoint, you can see here on this chart that cheese production generally tends to trend slowly lower until bottoming out around the September time frame. So we'll have to see what production looks like, but given where stocks are at, production has to pick up quite a bit if we're going to replenish those inventories. Now, switching over into those cheese inventories here, last week we took a look at our monthly cheese inventories, but here we have a chart of our weekly cheese inventories. So we do get this data each and every week here, and a lot of times they don't really move in tandem with those monthly stocks numbers. There can be a little bit of discrepancy there, but showing the same thing here as the monthly number, showing that we are well below where we were at a year ago. In fact, on a year-over-year basis, we are down 24.4% from this same week last year with cheese stocks. And as you can see, we have finally maybe just bottomed out here a couple of weeks ago. We've increased our cheese stocks 4 weeks in a row now, which has been a long time since we've seen an increase in stocks of more than a couple weeks here. Now, as you can see on the chart, you can see this blue line here. This represents 2009. You can see that really our pattern that we're seeing now has a lot in common with that one. We bottomed out around the same time after really struggling to replenish any inventories into this time frame. And that year we saw inventories build up pretty nicely from this point where it had bottomed out. So not sure if we're going to see a pattern play out like that, but like I mentioned in our cheese production report there, definitely has a lot of work to do to replenish those stocks, meaning either demand's going to have to fall off quite a bit or production's going to have to pick up quite a bit. So looking at the week ahead, we'll have USDA supply and demand report out, as well as a crop production report out on Friday of next week. So tune into next week's video for a recap of that. And that'll do it for us here today. On behalf of the Market 360 advisors here at Stewart-Peterson, thanks for watching and have a great weekend.